Welcome everyone. Let's full start our lesson one. Today lesson will go through our LO1. As a couple of you know me, my name is Anjum Sathar. Please, if you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. During this lesson, we'll go through our LO1 learning outcome one, and I'll quickly show you because all the required resources available on our Moodle page. I'll share with you a couple of books, which is normally we use for ACCA F7 exam, which is financial reporting. So please, those you can use for, and I'll share with you a couple of, the self-paid handouts as well. Those normally I used to be at my other place. So please, during lesson, if you have any question, feel free ask, uh, as you know me, and I'm working with University last 10 years now, and I'm also teaching at University of Bradford. And I do practice as a professional accountant, and I'll try my best, you meet your expectation. Please, during lesson, if any question, feel free. If you don't mind to, if you can introduce, that will be great. We know each other, and then we'll start our lesson. If you can speak on the mic, will be great. If can't, you can chat in the chat box, please. If you can introduce, so we know our all group members know that. So please, if you don't mind to share. So let's introduce ourselves, please, first.
Hi, Jimmy. This is Prabha. I'm working in an accounting firm, and apparently I'm studying ACC as well. So I would like to get that IFA affiliate membership. That is what I'm continuing here. So hopefully, as soon as we can finish that two subject, that is my aim, and yeah, look forward.
Brilliant. Thank you. Thanks for introducing. Yes, please. Who's next, please? Thank you. Okay. Due to any reason, if you can't speak on the mic, you can just in the chat box, please. You introduce yourself if you don't mind to. Okay. Let's we'll start then. I think so. Two more members are there. Hope so they can hear us, and then we can start now maybe. Okay, quickly I'll share with you. Okay, welcome everyone. Okay, now we'll know each other, with the passage of time as well. Okay, so as the aim of this unit, please well mention really the corporate reporting. Really, we want to develop understanding about different accounting standards. We'll go through financial reporting standard, and of course, is a crucial subject areas. And especially when you're dealing with mergers, acquisitions, group accounts, and these are quite crucial. Oh, thank you. Thanks for joining. Hope so. Nice weather in the Bay. Yeah? Here is not bad today. The 12 in Leeds. Huh? Okay, so thank you. This lesson, please, will go through our LO1 learning outcome one. Understand the fundamental ethical, professional ethics, 5 professional code of ethics, which we'll discuss. Those are very crucial, and as a professional person, we're supposed to follow these. Either you're member of ACCA, AAT, IFA, or any other awarding bodies. Okay, so please explain the importance of the professional behaviors and comply with the accounting standards. We'll discuss about ethical requirement in corporate reporting. That's key, for today lesson. And the next lesson, please, we'll go through different financial reporting framework, and we'll discuss about, the merges and consolidated financial statements, which we'll go through. Lesson 3 heavily focus will be associate parent, subsidiaries, element. And lesson 4, please, will go through the financial ratio performance. Okay, so please during during our lesson, please we'll go through the key indicative contents as given, please. So these are all the standards. So we'll go through these standards. So first, IAS 1, International Accounting Standard 1, which is about the financial statement, how we prepare and how we can present, and financial statement need to be true and fair. So keyword is a true and fair. International Standard 2, please, about the inventory. Inventory should be recorded at cost or net realizable value, whichever is a lower, mean the sale value at cost. Like Windows 98 CD software, maybe we bought a 200 pound CDs, but at the moment, current value of the CDs is just maybe less than 10 pound, or maybe no value, no one really looking to buy these. So we have to revalue our assets accordingly under IS2. And inventories can be different evaluation method. We don't use last in first out now. We use for management accounting, but not financial accounting. Cash flow under 3 activities: operating, financing, investing, inflow and outflow of the cash. Accounting policies and estimates, that is all is under IS 8. Events and post events within 90 days after year end and before signing off the financial statement. Any event, major event, we can adjust it in book of account. Property, plant, equipment, please. IS 16, we need to be look around the depreciation values and revaluation of assets as well. IFRS 15, revenue and the proportion up, because if it's a construction contract, how much is the work being done and completed, and you can show as a revenue in the book of account. Okay, so please, impairment of asset, when asset need to be impaired with the carrying value, net realizable value, book value, and market value, economics value, all will discuss, and IS 37, provision contingent liability when the likelihood is more than 50%. If the case of the asset we can measure reliably, then we can include in the definition of asset. Otherwise, it's not an asset anymore. Intangible asset, of course, is the goodwill, impairment of the goodwill, and generated goodwill, and how we can do the value of the goodwill. So that will be the key, of course, which we different awarding bodies you well aware of. AAT, ACCA, ICA, WR, couple of course, IFA as well, and the consequences of unethical behavior, ethical requirement as a professional person, professional behaviors towards, true and fair. Of course, after Enron scandal, World Telecom, and recently Enron, and we have a couple of, construction companies, and they have the pension shortfall and number of others with rates, along, and new accounting standards carry on coming. International Accounting Standard Board roles, International Ethical Standard Board, that can be in our discussion. So please, understand the appropriateness of the financial reporting. That's our lesson 2. Be able to prepare the financial statement of group of entities, lesson 3, and then of course, so these are indicative content what we're supposed to be learn next, few weeks, please. Okay, we'll start. Okay, so please, as we mentioned, this lesson will cover our LO1 learning outcome 1, and that's the key. Each lesson will try our best, to cover one learning outcome, maybe slightly lessons fast. If any point you not get it, we can go back to one-to-one as well. And other than that, all the previous lesson recording available on our Moodle page. Please follow the Moodle. Okay, always good to be starting before starting any activity. You can reflect yourself how much we know accounting standard and why accounting standard is important, in especially, because in a global village where financial statement and the companies and the businesses across border is happening, of course, unified system. That's why international accounting standard. Yeah. So please to remember easily, professional code of ethics, we use the word popular. Some people are very famous, they chat in the offices and we know them. and popular people chat in office. So if you want to remember these ethics, so first P is a professional behavior. Of course, not conflicting information, true and fair information, not hiding, integrity. And then, of course, second, professional competencies and due care. It's mean up to date knowledge. Of course, as a professional accountant, you need to be make sure 35 hours CPD throughout. Either you read magazine, online course, anything you done. So that is quite good. Of course, IFA member, please, if you go, you can attend a lot of events, which is happening in the Middle East, in various other part of the UK, and throughout, IFA direct, that's quite good to please attend those, and that will help us, So, and also is a part of CPD. Confidentiality, of course, we have a GDPR, General Data Protection Regulation in UK. Confidentiality or Privacy Act, which we need to be follow as a professional person, and if we don't follow it, it's also because it's ethic and morally should be correct. We can't declare the information third party without, and if not in the wider interest of society. If it's a wider interest of society, then maybe in the light of the court ruling, then we have to declare if anyone money laundering and all things. Integrity, honest, of course, accountant, always try your best, the integrity to protect and objectivity, of course, not conflicting, biased information and objectivity of the account and not compromise due to the professional are different threads we will go through, please. Explain the importance of the professional behavior and the compliance with the accounting standard, the main, the aim of to ensure the transparency, reliability, and consistency in the financial statement and standardized accounting policies and the principle and the nature of, and really we need to be look around the economies and transactions and all must be recorded in the similar manner and follow the accounting standard. Of course, turnover, revenue, and sales is the same, but we're using the word revenue and look around in standardized IAS 1, the term as a professional and ethics morally principle, wider interest of the public really is a crucial element. Okay, profession and professionalism. Profession is the body of theory or the knowledge and which is used to support the public interest, and professionalism, talking and art, we can taking actions really to support the public interest. That's the key as a professional person. Of course, we need to be look around the ethics in the light of professional code of conduct. Of course, we need to be as a professional person regular, up to date, the knowledge which we just mentioned, CPD rules and regulations we should follow. Uh, over the time, the profession appears to be taking more of the proactive than the reactive approach, so we have to look around taking responsibility of any negative consequences of accounting practice where appropriate, amending those practices and remove, those consequences. Of course, true and fair, the record keeping is very crucial in term of, and that's, which we can look around, either you member of ACC or any others as well. Okay, so accounting standards, please, these are very crucial. We have to look around whichever you follow, either local or international, and normally we are going more towards in the local standard, international standard embedded in a way is quite look like similar. International Financial Reporting Standard, EU, International Accounting Standard Board, International Accounting Standard Committee, and these, the legislation and regulatory body. Okay, so International Accounting Standard Board conceptual framework out the principle are the coherent International Accounting Standard Board belief should be underlie the preparation presentation about the financial statement. Financial statement general purposes provide the financial information useful existing or the potential investors, stakeholders, those are, and they can make the decision based on the information true and fair. Of course, the all the resources, which is like assets, liabilities, the legal obligations, um, chain economic financial performance, we can look around the profit. All these going concern mean the business will carry on as a normal for a certain period of time. If anything is a material, we should highlight it in the financial statement. Okay, so please, fundamental characteristics, these are quite crucial, and we need to be all the relevant, capable, different decision, including all the material information, faithful representation, one of complete, neutral, and free from errors. The information should be part of enhancing these are enhanced, qualitative characteristics, the quality, comparability, 2 years figures, please, timely prepare financial, we can verify what is we are saying in the financial company on. That's why IFRS 16, which is about the leases and the lease agreement, and that's we need to be showed in the financial statement. Understandability, all those people have the basic understanding about the accounting and finance. The figures should be understandable. Okay, the material, all the material information, because materiality concept, all the significant, of course, those should be, and fair representation, of course, we can look around the required by the Company Act, financial reporting standards, and these always supposed to be followed. And of course, when you're looking at asset, what goes in the asset, anything which is owned by entity which flow the future economics benefit, liability is the legal obligation, equity the owner interest, the income increase, the economics benefit, expenses reduce, and the contribution from the owner in equity, any investment or the distribution of the owner decrease the equities, and which we can look around anything draw for personal use. Intangible asset, please, asset which we can't, it would touch physical substance. Please, we need to be look around the intangible like the goodwill, patent, copyrights, and all. We need to be look around, identify asset, and we can separate and the cost. The goodwill, of course, goodwill um, is one of the key element when we go through the financial statement consolidated as group. So that's we need to be under IS 38. We mentioned earlier purchase of the goodwill. Of course, internally goodwill generated is very hard to measure, but if you think about the accounting equation, asset equal to liabilities plus equity, but if asset minus liability equal to net asset, and the net asset always equal to the capital figures, and if the net asset if someone is happy to pay more than the net asset, the difference will be under the purchase consideration, we can't call it the goodwill. Okay, so that's we'll go through research and development. Of course, research is can't be and the development expenditures, and we can say if we can measure reliably any money we spend, we have a resource, a technical availability, then we can treat as an asset. Like if we develop the formulas like COVID-19 vaccine, and then of course, so we can measure reliably, then we can say if that's in the development and the research, those we can capitalize it, and then we can include in financial statement as I said. Amortization, impairment, these are the key which we need to be look around under IS 36, please. And impairment, of course, is the impairment is normally the word we use the losses, impairment loss, and carried out, impairment reviews, of course, which we need to be annual impairment reviews. That's always crucial. So the key, the assets should be made at the lower carrying value or recoverable amount, whichever is the lower, and then we can pick it higher of both fair value or the value in use, whichever is the higher, that will cover here, and the carrying value asset minus the depreciation, we can say net book value or the carrying value of the asset, those we can, if the value in use uh, are the fair value, the market value. So we call economics value. So whichever is a higher, that's we can consider, and then we can look around impair our assets. So these impairment reviews we will carry on doing. Okay, anyone, any question, please, if you like to ask? Okay, very welcome. If you like to ask any question, we can go through. Otherwise, we'll just So accounting of the impairment. So those we need to be recognized in the financial statement. Okay, so please, whatever you do, always double entry bookkeeping. We use the word debt click. What goes in the debit side, expenses, asset, and drawing. When those increase, When the decrease opposite debit is a credit. Uh, Click please. Of course, nowadays nominal code is a fair and very well contextualized, and then of course entering in one side it can be automatically create the figures. Liability, the legal obligation. Income is mean the sales, and the capital mean the investment. When these increase we do credit, and when these decrease we do debit. Opposite debit is a credit. So that's, keep in mind. Please double entry bookkeeping. As we discuss, inventory is IS2. Net realizable value, whichever is the lower at the cost, or net realizable value. Two criteria, we always record the inventory lower the cost or the realizable value. The value we can sell the asset or the cost what we paid it, whichever is the lower inventory should be recorded at that time. And as we discussed, LIFO method is not allowable under the financial accounting, and the inventory should be valued either first in first out method or FCO, average, the cost method. Okay, then IS 37 provision is the liability, uncertain timing of the provision. Contingent asset, like, the case is against the Facebook, the likelihood that Facebook lose the case of data breaches, and that's, we can recognize in the book of account as a contingent liability. If that's, the likelihood more than 50%, those we can look around in the light of the accounting standard. The provision obligation arise, from the past events, whether are the asset, contingent asset, the possible asset, arise the past event, and whose, existence is confirmed, and we can recognize the book of account. So please, we can follow the criteria in the light of IS 37. Either you want to record it as asset or liability, and that's, IS-10, we discuss about the post-adjusting event. Is it that the event can be adjusted within 90 days before signing off? And thus, the pretty information should be included in this year's financial statement. Revenue, of course, that we need to be make sure they include the proportion of and allocation of these. We need to be look around the dividend, our revenues, and the income should be recognized, and the revenues, the proportion of should be follow according. Okay, so property plant equipment, which is IS 16, not IFRS 16. That's IFRS 16 is new, but international accounting standard for which we assets and property plant equipment revaluation model we can use, and the basic rule depreciation. Different method of either you use the diminishing balance method, some of digit method, but should be consistent with the method. And because if you want to change it, make sure the previous year figure need to be reinstated, because that's, otherwise as the financial statement not prepare the true and fair. Of course, non-current asset registered, we can all our asset depreciation, net asset value, these we need to be in line in the light of. So please, we need to be make sure we can include those, and we'll make adjustment accordingly. Okay, then please, one of the important financial statement is the cash flow. Under IS-7, we prepare and indirect method, whichever use we can use for under IS-7. Operating activity, which is mean our normal business, like, the Tesco normal business is the food and the fast moving good, and that's, we can and their and all activities, buying, selling, and our current asset, current liability, there's changes in, that's, it come under the operating activities. Investing, if you have a spare cash in, you're investing in the non-current asset, buying, selling, that's, is cash flow increase or decrease under the investing activities. Financing, due to the either debt financing or equity financing, or settle those. So how much money in and out, those we can look around and we can reconcile. Of course, these are the performance you've been given, and when we'll go through, because this is not exam based course and this is assignment based course, it means we can embed the example from the book or from the journal or from your own, keeping in view of GDPR. Don't give the client, those information, not public domain. Other than that, we can add, some example. Then when we explain, we can little the interpretation and the things in the light of the standard we can explain. Then we can address the learning outcome. So this is the template of the cash flows, what come under investing, financing, and uh, operating activities as we discussed. So please is all so we can pick the point and we'll go through some questions in next lesson. We discuss about 5 professional code of ethics, and we'll discuss about the threats, please, self-review, self-interest, back-end commission, self-review, checking on work, advocacy, if we have the clients, giving two clients same information, we need to be make sure we're not supposed to be biased. Familiarity is knowing number of years, and intimidation, otherwise you will be risk, we lose the job, we lose the contract, and you do work, maybe we can compromise our objectivity, our integrity. Professional safeguard, always we need to be make sure regular doing CPDs and training and update knowledge. Safeguard after for peer reviews, independent consultation, good internal control, always make sure, and within our professional code of ethics, not compromise those. Reliability of the financial statement, credibility, value of money of audit, and credibility of the profession, these are the crucial elements which we can. Self-interest, the employment with the client, partners or family members involved are taking the gift, free holidays, then of course we can compromise the professional code of ethics. There is no such rule how much worth of the gift we can accept, but normally up to £50, or use the professional judgment, not impact on your independencies and true and fairness, about the financial statement, or not leak the information in the light of course, the internal information to external. And these are the threats which we just mentioned: conflict of interest, family members, intimidation. These shouldn't be happen, because the financial statement should be in line and true and fair information, and should be prepared in the light of the accounting standard as we discussed those standards. So that's the key lesson today. We discuss about various standards. So let's we quick little recap what we discussed. We discussed, key important standard: international accounting standard 1, which is how to prepare; IS2, that's very crucial. We need to be about inventory; IS10, at least, the events and adjusting event; IS16, property, plant, equipment, PPEs; and of course, IS 18, we discussed about revenue and benching; IS 36, 38, and even 37. These are about the good standard really to use, and those normally we use a lot here. If you're doing reading the financial statement in the light of. So that's all from my end. Anyone, any question, please, if you like to ask? Okay. So I'll share with you, please, the books on the WhatsApp group: Kaplan, Osborne, BPP. Within that are the Kaplan cards, those are quite good. Or if you want to be, please, you can set up your account. It's free on, because so that's you use is opentuition.com, and look under F7 exam of ACCA, which is about financial reporting. Or of course you can look around the advanced reporting elements as well. These are quite good, and the booklet, and of course if you want to deep dive into and further advance to. But this is your assignment based, so we go through assignment discussion lesson at the end, which is we'll complete our LO 4 LOs, and then we'll go through our assignment discussion the 5th week, and that's the way we can achieve what we're supposed to be. And then of course you can try to prepare your assessment within our assignment within 2 weeks after we finish, and then of course we can sign off one by one unit. Okay, yes, please, any question from anyone?
This slides available in the Moodle?
Yes, these slides available on Moodle, but if you want I can share on the WhatsApp group as well.
Please, thank you.
Other than that, I'll share with you the Kaplan books, yes, and I'll share with you the PBPP, And couple of you use for AAT level 4 qualification, those I'll share with you as well. And if you want to pick example when you do assignment, so we can pick from any book and we can use as example and we can explain underneath. So that's all. Anyone else? Any question, please, if you like to ask? Okay, so that's all. PPCIO: professional behavior, professional competency, confidentiality, integrity, and objectivity. These are the 5 professional code of ethics: self-reviews, self-interest, advocacy, intimidation. That's the threats towards ethics. So we need to be minimize those, and that's won't be happen and compromise our professional code of ethics. Okay, so that's all from my end, and hope we'll speak you next lesson. We'll go through LO2. I'll upload and share, some articles with you on our WhatsApp group, and I'll share with you the books, this afternoon, and those you can use. But all the required resources also available on our Moodle page, and all these slides also available on the Moodle page. You can follow as well, please. But other than that, I'll suggest you is always good to be IFA direct because you're a member now as a student and you can attend the events if you Google search it and say events. Those are absolutely free. And normally the local events either in the Bay here in the UK and the various locations carry on happening. And those quite good to attend, that give you good, commercial awareness and especially member interactive. Of course, a lot of things carry on changing and rapidly changing, digitalization, AI use, and various other. Those are quite good to attend. Okay, so that's all from my end. Thanks for attending, and hope all will speak you next week. And have a lovely weekend.
Thank you.
Thank you.
Thanks.
Thank you. Brilliant, brilliant. Thank you. Thanks for joining and sharing, and have a lovely weekend. Nice to meet you all. Thanks. Bye bye. Thanks, Blessing. Thanks for joining.